day traders from across the globe, and welcome to the 1390th edition of Short-Term Trading Live with Oscar Carboni, and of course that would be me. How about those Mets? Yeah, baby, we're in the series. Go, Mets, go. Woo. Hey, when you're a Met fan, you don't get to say this a lot. I don't want to hear nothing from you guys. 50 years, how many times do I get to say this? Hello, go Mets. We'll see what happens. Mets. All right. This video is being filmed on a Wednesday night for trading Thursday, October 22nd, 2015. As we know, futures trading is extremely risky, causes substantial financial loss, is not suitable for just about any of us. It's insane out there. Volatility is like this. But I'll tell you what, Omniacs, with volatility comes opportunity. Now, you've got to use wide stops these days. You've got to have proper risk management. You've got to have a big set of kahunas. But, you know, with the volatility comes a whole lot of opportunity. So don't let this scare you if you are the type who trades and understands the risks. Let's get moving. For trading on Thursday the 22nd, we're starting off with a red Omni and emini S&P and NASDAQ. Red Omni, emini S&P, NASDAQ starting the day off. As you've seen with the crazy volatility, I can't guarantee the entire day we're going to sell rallies, but we're going to start off selling rallies here and here, and we'll see where it takes us. Traders, what's on the board? Emini S&P, NASDAQ, Russell, if you will, and gold. Technically, they are not out of the woods yet, and I've got some charts I want to show you that will prove exactly that. Gold is not out of the woods. It's not just ready to blast off. We need confirmation, otherwise down we go. Even the S&P and NASDAQ, the longer it sits here, the uglier it starts to get technically, and I'll show you why. Traders, if you like the analysis in these videos, one, subscribe to them on YouTube. Hit the subscribe button so that you get an email each time I put one of these videos out. They come out very often. And two, come join me at livewithoscar.com. Come to my free trading room. I will help you stay calm, keep things in check, and use professionalism during the day when we have these wild, volatile swings. Livewithoscar.com. With no further ado, let's go look at some charts. Okay, traders, in my last video, the one right before this one, I showed you this F flag. An F flag, it's an Oscarism. It's called the F flag. And basically, because at the end of its life, you get F'd. The market drops down pretty hard. F flag. So I said the Omni's pointing lower. According to what I see from here, we're going to drop down lower than the F flag. So we went short for trading on Wednesday. Here's where the chart was, or where the market was. And this is what happened. I mean, wow, it did fall right out of the flag. Nice Omni. Now, if you add this support line, which has been violated, to the fact that we fell out of the F flag, you've got a reason to be bearish. And we've got an Omni pointing down. NASDAQ is bearish, traders. That's what we're looking at starting off the day on Thursday. Let's go, Mets. Then you've got emini S&P. F flag showed you the same thing in the video right before this one. Here's where it was when we showed it to you. And this is what happened. I mean, wow, rock and roll, right? This stuff works. So we have fallen out of that F flag, and we ended up down here. So now let's move forward. Let's go take a look at the weekly. And here's why I say we are not out of the woods yet. Traders, do you remember this chart when we called the flat top way back here? This is a weekly chart. So a couple of months ago, I called this flat top 25 times. We came across here without making a new high, and then we called for the downside, and the market did dump. I mean, look what happened. It was almost a picture-perfect call. The very next day, the week started, and this happened after the top was called. Not bad for the flat top. So the market did drop, and as I showed everybody, it's kind of customary in September for the market to drop just about every September. 2012 a little drop, 2013 a bigger one, 2014 a larger one, 2015 a major drop. So you've got this, right? And you think it recovers after the drop usually. That's what you'll usually get, some sort of a recovery. But let's look at this chart again with one of my averages on it. And that doesn't look healthy at all, does it? We have maintained, anytime we dropped, we've maintained above the average. Even here, when we got to the average, we popped. Look what's happened here. We've come down, tried to get above it, back down, got back to it, and now looks like it's starting to fail. This is this week's bar building right here. So with this average added in, this is not looking so appetizing for the bulls, is it? I mean, we are day traders, but I'm pointing out that it looks like complexion is changing here a little bit. NASDAQ. When you look at this average on the NASDAQ, just about any time you hit the average, I put these little, they're kind of dull, but I put these little green O's here to just show you. Circles. You hit, make a new high. Hit, make a new high. We hit, we make a new high. It's a pattern. You come down here, you make a new high. You come down here, you make a new high. After coming down here, you broke the average, continued on down. This is a weekly chart now. Came back up to it, stopped cold, came back down, came up to it again, and now we're sitting here. So what's going on right there is, unlike what happened each one of these times, what's happening here is you've got the opposite, down and back up to it. So the next move could very well be down. Starting to look a little interesting here, isn't it, on this long term? Now let's go to gold, traders, and here's why I was telling you that gold is not out of the woods either. Isn't that a wonderful looking bull flag? A bull flag is something that should produce an upwards move after you come out of the bull flag. So you spend a little time going up, then you come down a little, and then you have an upwards move, so there's your bull flag. Is that a bull flag? Let's look back here. Let's look here. Let's do some calculations, and let's look at the next chart. Let's remove what could have been a bull flag, and let's count. The last time we hit the 200 bar moving average in gold, we stayed up there for 7 days. 7 days from here to here, and then we cracked. 7 days. Here we are. 6 days have passed. 6. Isn't that interesting? 7 days, and then the break came. We are at 6 days right now. Should we break? Maybe that's what should happen. Maybe this is actually a failure. Gold is not out of the woods. But hey, let's go Mets. Gold not out of the woods. Then we've got this, traders. To prove that gold is absolutely not out of the woods, silver, the last time silver came up and hit the 200 bar moving average, it spent 12 days from here to here, and then it started to dump. Guess how many days we've spent from here to here? Just guess. I'm going to leave that to your imagination, how many days it's been. I'll leave it to you. See if you can rack your brains out on this one and come up with exactly how many days we've stayed by the average. Traders, I'll see you all at livewithoscar.com. So, traders, you've seen the chart. You've got my technical argument for why we are starting off selling the rallies in emini S&P, NASDAQ, likely Russell, and you know what? Gold, too. I think we start off selling the rallies in gold. Now, once again, it's not out of the woods, but that doesn't mean it can't turn and go gangbusters bullish. Any of these. But we are starting off Thursday with that red arrow in all three of these markets, and we'll see what happens, okay? Come on down to livewithoscar.com, and I'll show you how we handle the trades. Understand with this big volatility, this big movement each day. I'm in front of you now, 18 hours, 10 hours, 12 hours before the action's going to begin doing the video. Lots of things happen between me filming and us getting in and out of the trades. You need to come on down to livewithoscar.com into our live trading room. It's free, and see how we're handling these trades, because you can't hold me to an arrow all day anymore. I mean, I'm not going to accept that. Sorry, it's not happening. No one can be held to an arrow anymore for the entire day. So if in the video I say we're selling, by the end of the day we could have ended up long and holding for the moon. So you need to come on down to livewithoscar.com to see how the complexion changes. But undoubtedly we will start off selling rallies in gold, silver, gold, NASDAQ, and emini S&P. Traders, again, I'll see you all at livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders. I'll see everybody in my trading room at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.